Good morning. Today is Wednesday, December 17th, and we're looking at the ETF of market vectors for the oil, OIH. OIH. Now, as we all know, oil's been just under $60 a barrel, and I think we hit 50 some odd dollars a barrel. Well, the OIH, we're down here, and what made me want to buy this. Now, yes, this is trying to pick a bottom, of course, but what I saw yesterday was very interesting price action where the market opened up, sold off just a little bit right down in here, and then reversed and took out the high of the prior day, rallied right up in here. Now, we're so overextended to the downside. I mean, look at how long the market's actually been trading below the blue action zone. We're so stretched below that blue action zone that I think it's time for a little snapback back into that blue action zone. So when you take a look at this trade, the reward to risk on this trade is actually pretty good, okay? Actually 2 to 3 to 1 easily. So yesterday I entered this market at 35.15 with an initial stop below the intraday low of 33.54 to 33.44, okay? And I'm looking for this market to come up. First profit target on this is 36.95, 5 cents below the round number of 37 even. So I'm long at 35.15, looking to take something off the table at 36.95, giving us about a $1.70, $1.80 on the first portion of the position. And then I'll see how far we can rally from there, and I'll start trailing up the stop at that point. But right now, I'm long OIH, the ETF, looking for some sort of bounce back up into the blue action zone, which is normal, okay? Again, we've been extremely overextended in oil, and therefore the trade. Plus, we had a nice setup down in here as well. Very low risk trade, okay? So that's oil. Now, I'm still bullish the overall market, okay? From these levels, but not higher levels, okay? Now, this is a huge rally. Took the market in new territory up in here, right? 38.2, like I pointed out yesterday, was hit yesterday, okay? Now, yesterday was a little fake out. If you take a look at this chart, if you take a look at these bars very closely here, hold on one second. If you look at yesterday's price action, the market opened up lower and rallied considerably. If you take a look at the E-minis, or if you day trade the E-minis or look at the market on an intraday basis, that was a huge fluctuation yesterday. The S&P's moved from about 1275 to 2018. It was about a 45-point move from low to high. And then, second half of the day, the market completely reversed, closing near the low. Now, this is typically a very, very bearish signal, right? A bearish hammer, or what I like to call a bearish blow-off bar, opens and closes near the low of the range. That's definitely bearish, okay? So, look, going into the last 2 weeks of trading for the year, I believe the market's going to lift from here. Now, we could go a little lower, but I think we're going to get some type of Santa Claus rally. We almost always do. So I'm watching the market very closely today. And as you can see, so far, look, the market's been open for an hour and 10 minutes, and so far the market has not been able to test yesterday's low. So we're up off that low, trading about mid-range right now. Now, it's 10:40 in the morning. If the market is able to penetrate up through today's intraday high so far, that's been put in place, I think we could see a pretty nice rally. I believe we have some news coming out this afternoon as well. I'm not exactly sure. I think we do. So that's why we're not seeing a lot of activity this morning. So I'm gonna watch this very closely today, okay? And if the market's able to trade within yesterday's high and low and not penetrate either through the high or the low, then we would set up for a really nice trade tomorrow, right? You heard me talk about this a million times, that inside bar, right? When the market is contained within the prior price bar's range from high to low. If we see that today, we're seeing that all across the board, of course. The Russell, the IWM, the SSO. If we get that set up, then I think a perfect opportunity, and I'll outline this on tomorrow's video, but if we do get that inside pattern, I would be looking to buy the market very aggressively above the high of today tomorrow, if today is an inside pattern. Heck, even if today makes a lower low, obviously we'll make a lower high. I mean, I doubt we're going to rally up through yesterday's high, but so assume we have a lower high than yesterday, but we have a lower low. I would still use today's high as a trigger point to get long the market. Because at that point, your stop is very determined, right? It's very spelled out. It would be below the prior bar's low, right? So let's just draw this out for you to make it real simple, okay? So let's just say we expand out and we make a lower low from yesterday, but this is the high, okay? I'd be looking to buy it up through today's high tomorrow, and the initial stop loss would be below the low, okay? That would be my trigger. Obviously, if today is really contracted and we have an inside pattern, then I think that trade would be even more powerful. So hope that helps. Let's make some money. I'll be back with you tomorrow. Bye for now.